Hello and welcome back to Plain News. Today we're covering a major development in the U.S. aviation market that could reshape the landscape of leisure travel. Allegiant Air has announced plans to acquire Sun Country Airlines in a merger deal valued at approximately $1.5 billion in cash and stock. This is one of the most significant consolidations in the American low-cost carrier segment in recent years, and it's raising plenty of questions about what comes next for both airlines, their passengers, and the competitive dynamics of leisure flying across North America. Let's break down what this deal means, why it's happening now, and what travelers can expect as these two carriers come together. So here's what we know. Allegiant Air, based in Las Vegas, is set to acquire Sun Country Airlines, which operates out of Minneapolis, St. Paul. The transaction is structured as a combination of cash and stock, bringing Sun Country under the Allegiant brand. If all goes according to plan, the combined company will operate under the Allegiant name and remain headquartered in Las Vegas. Now, this isn't finalized just yet. The deal still requires approval from regulators, including the Department of Transportation and the Department of Justice, as well as from shareholders of both companies. Assuming everything moves forward smoothly, the merger is expected to close in the second half of 2026. That gives both airlines roughly a year and a half to navigate the regulatory process and prepare for integration. It's worth noting that mergers of this scale don't happen overnight. There are operational hurdles, cultural integration challenges, and of course, the need to maintain service continuity for passengers during the transition. But if successful, this merger will create a much larger player in the U.S. leisure travel market. For those less familiar with these carriers, let's take a moment to understand who they are and what they bring to the table. Allegiant Air has built its business model around connecting smaller, underserved cities directly to popular vacation destinations. Think places like Punta Gorda, Florida, or Mesa, Arizona, flying point-to-point to leisure hotspots like Las Vegas, Orlando, and Phoenix. Allegiant operates an ultra-low-cost model, meaning base fares are cheap, but just about everything else, from seat selection to carry-on bags, costs extra. The airline has been profitable for years, focusing on high-margin leisure routes with minimal competition. Sun Country Airlines, on the other hand, has a slightly more diverse operation. Yes, they're also a low-cost leisure carrier, but they've expanded into charter services, cargo operations, and even some scheduled international routes to destinations in Mexico and the Caribbean. Sun Country has positioned itself as a value-oriented airline with a bit more flexibility than typical ultra-low-cost carriers. Their hub in Minneapolis gives them a strong foothold in the upper Midwest, a region Allegiant has historically had less presence in. So what happens when you combine these two? You get complementary route networks, expanded geographical reach, and potentially more efficient operations through shared resources and economies of scale. So what does this mean for you, the traveler? In the short term, probably not much. Both airlines will continue operating independently until the merger closes. Your existing bookings, loyalty points, and flight schedules should remain unaffected for now. Looking further ahead, there are potential upsides. A larger combined network means more destinations and possibly more flight options, especially if you're based in the Midwest or looking to travel internationally. The merged airline could also invest in better technology, improved customer service, and potentially more modern aircraft. However, there's always a risk with consolidation. Fewer competitors can sometimes mean higher prices, especially on routes where the combined airline becomes the dominant or only player. We've seen this pattern before in airline mergers. Initial promises of better service and more options, followed by reduced frequencies and higher fares once the dust settles. It's also unclear how Allegiant will handle Sun Country's charter and cargo operations. Will they maintain those services, expand them, or scale them back? These are questions that will likely be answered as integration plans become more concrete. For frequent flyers, keep an eye on loyalty programs. Sun Country has its own reward system, as does Allegiant. How these programs merge or whether one is phased out could impact how you earn and redeem points. If you're a loyal Sun Country customer, it might be worth reaching out to the airline for clarity on how your status and benefits will be protected. Zooming out, this merger is part of a broader trend in the aviation industry. Consolidation has been a recurring theme over the past 2 decades, from the Delta-Northwest merger to the Air American-US Airways combination. Each time the argument is the same. Bigger is better. Scale drives efficiency, and consumers benefit from expanded networks. But the reality is more nuanced. Yes, larger airlines can invest more in technology and infrastructure, but they can also wield more pricing power, especially in markets with limited competition. The question regulators will ask is whether this deal tilts the balance too far in Allegiant's favor, especially in leisure markets where both airlines currently compete. Internationally, this merger also signals that American leisure carriers are thinking bigger. With Sun Country's experience in international charter and scheduled service, Allegiant could accelerate its expansion into Latin America and the Caribbean, markets that have seen explosive growth in post-pandemic travel demand. Meanwhile, other low-cost carriers will be watching closely. If this deal goes through, it could prompt further consolidation in the sector. Spirit and Frontier, for example, have tried and failed before. Could they revisit that conversation? Or might we see new entrants like Breeze Airways position themselves as acquisition targets? So there you have it, a deep dive into the Allegiant-Sun Country merger, a deal that could redefine leisure travel in the United States. It's ambitious, it's strategic, and it's far from certain. Regulatory approval, shareholder votes, and operational execution will all play a role in determining whether this becomes a success story or a cautionary tale. Now, we want to hear from you. Do you fly Allegiant or Sun Country? What do you think about this merger? Does it make you more or less likely to book with them in the future? Drop your thoughts in the comments below. And if you enjoyed this breakdown, don't forget to like, subscribe, and hit that notification bell so you never miss an update. Thanks for watching Plain News. Safe travels, and we'll see you in the next one.